All right, so I thought I'll just make a video real quick. It'll be easier because answer your question. So there's a lot of different ways depending on how you trade. So like let's say Bitcoin for example, the easiest so far is pretty much in short you find the pattern and you trade the pattern until the pattern breaks. That's really it. Um, don't make it any more difficult than that. But for example, you have your 3 year, your 4 year cycle. So you have 1, 2, 3 years up, 1 year down, 1, 2, 3 years up, 1 year down, 1, 2, 3 years up. Although this is a red candle, it did actually go and make a new high, and then 1 year down. Okay, so it's gonna come down, most likely come down around these areas, wick it, and then you just trade it. The next 3 years you hold, and you just sell wherever the heck it's at. Right? That's one way until it breaks. Eventually it will break, but has it broken yet? No. So you just keep trading it until it breaks. So that most of the time you win, and then one time you lose. You get me? The one time where it is different, you lose. But if you also look at the weekly on Bitcoin, let me go on this chart. Oh, that's why. Boom, there we go. Right? So Bitcoin was at 126K. It dumped down, and then it has a relief rally up, and then dump down, and then a huge relief rally up, and then dump down. And right now it's basically going back to test that support area, and then just to dump down more. You'll see what I mean when I go into daily. It did it here. It did it right here. Is that it broke the support, came up, rejected, boom, new candle down, and so it just went way lower. So basically, this is one other way you could do it, right? Not financial advice, obviously, but this is one way you could do it. Is that so let's say that we're here. So it's just now crashed, right? You wait until it goes up, right? And then you see that starts to go back down again. So about right here, right? And then look, it kind of retested. So about right here, this is where I would start drawing my parallel, this right here. What is this called? Parallel channel, right? So you select the top, you select the bottom, or no, actually, whatever, you select the top. From here you select the next one, and then you bring it down. Basically this is what it gives you, is that it gives you the resistance, the support, and it gives you a 50% halfway mark. As you can see, it bounced off the 50%, right? And then it came all the way down right here. You see support, you just buy the support. That's it. And you can sell at 50%, right? This is more likely than not than you'll get profit. That's like very easy profit. Okay, and even then, this is a 9 freaking %, dude. Or you can wait till the full TP up here and you sell at the resistance, and then you do it again. Watch this. Wait. Boom, right here. Buy again. Wait. Oh, what do we have here? Sell again, or sell at the 50%. You get me? And then okay, this is, it's over. Like, this is kind of risky now. Is you sell, you see how this wick down here from the last bear flag that we had, right? We came all the way up there. We were basically sweeping that liquidity, and the price did not want to go up. It just kept rejecting, and came down, right? So therefore, now we know we don't want to go higher. So there's no reason for price to just keep bouncing up and bouncing up. We know that price does not want to be there, right? So therefore, it comes down, and then boom, we lost the support. Actually, we lost it up here, but then we lost the support up here. Now we're coming back to retest it, and coming back to retest it again. And then we're going to just dump and dump and dump. And then basically the next time you also do the same thing. Once it dumps, you wait for it to go to the high, to the 50% mark, draw your parallel, and just trade it. Just trade it. Look, it's happened here. Boom. Lost it. Lost it again, rejected, came down. Right here, parallel, bear flag, you trade that. Another one, you trade that. Right now it's losing it, so it's a bit risky. I still got in around like 58K, but this is I actually found other reasons besides the bear channel. Then you wait and you do it again. That's just one thing. You just find a pattern. There's so many other things I could show you. Genuinely, there's so many other things. What's it called? Like here, for example, you have sweeping lows, right? It crashed, but it's sweeping lows, therefore it goes up. It's sweeping highs. Look at the wicks going up, therefore it goes down, right? Let me do this. Look at this right here, this whole area right here. What was going on? It was sweeping the lows, lower, lower, high, therefore it went up. Look up here, higher highs on the wicks, therefore it went down. Lower lows on the wicks, therefore it went up. You get me? Higher wicks, therefore it went down, etc. You get me? It would show better if I'm on the weekly, actually. Let me see. Even last cycle, this is Bitcoin, obviously. You know, you have higher wicks, price goes down. You know, higher, price goes down. But here, you actually have lower, right? From the highs and the lows, you have lower. Like you can sit there and literally do this. You know, this price going down or going up? It's going down. So therefore, it goes up. You know, same here. Came down, therefore it went up. Like that's just this is like, honestly just so simple. Like people complicate things, but find an asset that has patterns and the patterns haven't broke and trade those patterns until they break, basically. As long as you sell. You don't sit there and you're like, no, this time's different. I'm gonna go explode. No, you just sell. If you miss out, who cares? You know, like honestly, who cares? Because you're still winning from all the other trades. Yeah, hope this video helps. Let me know if you have any questions.